Hello, everyone. This is Drew from Best of Us Investors, working with Mark on the Platinum Trading Platform. So, again, Mark has been in the investment field for over 40 years now and has worked as the director of operation for an online firm for about 10 years. As I mentioned before on our previous videos, he will be doing overviews on what he saw in the market and charts from the previous week regarding swing trades, and also share some of the stocks he's keeping an eye on for swing trades for the upcoming week. Now, for real-time buy-sell signal notifications based on 7 indicators and insights on stocks that are setting up for great trades each day, along with educational videos on how to read charts, come join our Platinum group and let's get through this tough market together, seeking for great swing trade opportunities and even for great potential entry points for long-term investments as well. So make sure you check the link in the description below for the Platinum membership. And I just wanted to remind you that this video is not made for financial advice, but for educational purposes only. So Mark, how was the market last week? And are there any major stock trades that you would like to talk about?
Well, Drew, we had a really interesting week. In the past week, we had the Fed coming out with 75 basis points raised to the Fed rate. We also had a jobs report come out on Friday, and they seem to conflict each other. And we're going to take a look today at what happened last week. We're going to look at some charts to show how news can affect the way markets move outside of swing trading and outside of fundamentals and technicals that we have to be aware of. Then we're going to look at some of our swing trades. We got out of our swing trade in NFE, and we'll go through that on the chart. And then finally, we'll look ahead at what's coming up next week because we have not only midterm elections, but the CPI report for October is coming out. And those are the type of stories that seem to be moving the market up and down and all over. And we're going to be in a choppy zone for a while, in my opinion, until we start to get some clarification from the Fed and this economy. So let's get going and we'll take a look at what happened last week. So last week was really a tale of two stories that really had nothing to do technically or fundamentally with the market. But on Wednesday, the Federal Reserve came out and raised rates 75 basis points. And when the first story came out, just on the report itself, people were pretty happy because it looked like the Fed was ready to start pivoting. And then once Powell came out and started talking, the market tanked. So that was on Wednesday. And you can see that the Federal Reserve Chair Powell and his staff had unanimously agreed to raise interest rates another 75 basis points. And he expressed awareness of rising rates on both consumer prices and ability to borrow. Powell insisted that the Fed is willing to do whatever it takes to put inflation behind him. And when he came out and said that, I'll show you what the market did. So the other story came out Friday. When Powell was talking on Wednesday, he talked about how he needed to see the unemployment rate pretty much rise to get price controls on labor. And on Friday, you see the October non-farm payrolls report came out and left investors divided because the labor market added 261,000 jobs. Well, this isn't supposed to be happening. It's supposed to be cooling the economy, and we're supposed to be seeing more layoffs. And so, again, I'll show you what this did to the market. So really, we're kind of in a situation where we're waiting for reports out of the Fed, and what we're really waiting for is when are they going to pivot and when are they going to start reducing the amount of rate hikes from 75 to 50 or 25, and that's really where the market is right now. So the sum total result of the week was that all major averages really capped off the week with losses. The Dow shed 1.4%, ending 4 weeks of gains. The S&P and NASDAQ fell 3.35% and 5.65% respectively to break a 2-week winning streak. So let's go look at the chart and see what actually happened and when these stories came out. So this is last week on a 5-minute chart. And you can see we Monday, Tuesday, and here's Wednesday in this circle here. As you see, we came up, and right here is where the report came out, and everyone was very happy that they thought that the Fed was going to pivot. And then right here is when Fed Chair Powell came out and started his press conference, and you can see what happened to the market. So the next day, Thursday, we traded straight flat on the 5-minute. And then Friday, you can see the jobs report came out, and everyone was happy when the jobs report came out, and then they started deciphering it, and you can see we closed down. So here's our 200 5-minute line, basically period line. You can see we're still going down on the NASDAQ. So here's the weekly chart on the NASDAQ, and you can see after last week we closed above the 200-week moving average. That once again we closed below it this week, so that would be 1, 2, 3, 4 weeks out of the last 6 that we closed, and that's not a really good sign for the market at this point. So we'll keep an eye on this for next week. This is the weekly chart of the Dow Jones Industrial. You can see the Dow Jones has done better. We did close 2 weeks under the 200-week moving average. Now we've come up, we've hit our head on the 50-week moving average for 2 weeks in a row, and we've closed down. So again, something we better watch, but the Dow is doing a little better on the weekly chart than the NASDAQ for sure. So something interesting happened today in our trade on NFE, New Fortress Energy, is I set in a limit order to sell at 60. Now at 60 was where the resistance line was, and I didn't think we'd get anywhere close. But you can set limit orders to sell on the top to hit a profit if you want. A lot of people don't use them. We use stops on the downside to limit our risk of the top side of our profit, or also to reduce the risk of a loss. Today, you can see we started out down, and this is the minute chart, so we can show exactly what happened. And we started out at 57.90, we went down, and then about 9:53, we started going straight up. And at this point right here, we hit above the 60. It triggered my limit order to sell. It's also called a take profit order. And you can see what happened to the rest of the day. It went back down, even though we would be up. It started to make a turn here towards the end of the day. We're not quite closed on the market yet. You can see it's going down. But what it did is it hit my goal, which was 60. We've been waiting to hit 60 on this particular stock because that's where the resistance is. So about at $8.50 profit over our cost basis of 51.50, and it's about 16+% on the last quarter of our position. So you can use these limit orders to sell on the top side, so you don't miss a potential spike up when you're out doing something else when you're doing a swing trade. Let's go over to our tracking spreadsheet, and you can see our last quarter position of New Fortress Energy. We had 25 shares left. Right now, it's trading at 58.36, so it came down. But we had a limit order to sell at 60, which was the resistance line. So it sold. We made about 16.5% profit on this 25 shares, or $8.50 a share, and we closed out all three now in 10 days. We had a sell order to stop at 60, and it hit the resistance at 60. So we made $212.50 basically on this trade of 25 shares. So when we add that up to our other two sell orders, we made $325 here, $212.50 basically. So our total haul on this one trade in 10 days is $537.50, which more than pays for 1 month of the Platinum channel. Plus, you can put some gas in your car and maybe go out to eat too with what's left over. So we'll continue to look for new positions next week and see if we can do this all over again. So on Monday, October 31st, we put JCI on the watch list, which is Johnson Controls International. And we did that because the previous Friday we saw that it closed above the 200-day SMA. And that is a bullish trend and a bullish indicator. And we also looked down and saw we're seeing a rising MACD. We're seeing a flat but high slow scholastic, and also a good RSI with good momentum. And we got it. If you would have got into that trade that morning at open, you would have got in at $58.19. And as you can see, we kind of went around. We touched on the 200 right here, although we didn't close under it. And then we had earnings, which normally I get out on earnings, but you can see with earnings it shot up. And then today we're currently at $63.77. So had you gotten in on this trade, you decided to paper trade in here, you would be up $5.58 a share, or on a 100-block trade, you'd be up $558 in 5 days of trading. But that's the power of this 200-day simple moving average. You can either use it as resistance and hit your head on it, or as support, you can see, and you can see what happened. And here's a resistance line up here, so we could still have some room to go, and we're way above the 9-day. We're way above the 20. We're way above the 50. We have MACDs that are still ascending. We have good slow scholastics, and we also show the RSI in positive momentum. So that would have been a good trade too. We didn't do it, but I just wanted to show you the power of this 200-day moving average. So we've seen how news stories can affect the markets and how they swing up and down. It's hard when markets are so volatile and moving off of stories to swing trades, especially when the market's in a bearish mode. So we are finding some swing trades, and there are some sectors that are doing well. But next week we have the midterms, and the other thing we have is the CPI report. And those are two stories that could also give us some volatility that is unpredictable and could affect our swing trades also. So just be prepared. This is Forbes is talking about November CPI report. Said, unfortunately, estimated inflation data for the month of October is not encouraging. Currently, the Cleveland Fed's nowcast has October CPI inflation running at 0.76% month on month, and that's high. So if inflation's still high, you can expect that people will speculate the Fed will continue its tightening process and not pivot, which will affect the market. So we have that to look forward to next week.
So, Mark, thank you very much for your insights and overview on the market. And I've actually learned a lot again from this episode. And I learned that even in a severe down market, if you know how to read the charts, we could actually do some swing trades to make profits. So I think not just myself, but a lot of people who are watching this episode has also learned a lot. So thank you very much again. And for more details and updates regarding swing trades, chart analysis, and stocks we watch each day that are set up for great trades, make sure you join our Platinum group. And again, let's successfully invest and make it through this tough market together. Thank you very much, and see you all next week.